When you write an original screenplay or you write an original book, you have to write it so it's believable, right? So when people read this, they can believe that it actually happened. Now, things can happen in it that are crazy or far-fetched, but you have to write something so the human brain still goes, okay, yeah, I mean that's pretty crazy, but I mean I can believe that. But when you do a documentary about something that really happened and you take the data from it and you put it into a movie or a book, you don't have to make it believable because it actually happened. It may not sound believable. It may sound crazy, like all the major banks on the planet doing the same thing that will eventually take themselves down, like in the movie The Big Short. Right? You don't have to make that believable because it actually happened. All the banks were, drunk at the wheel. They didn't care. And I find it really fascinating, interesting to watch the stock markets or the markets of the world, because things that happen, you couldn't believe they would happen, except that they are happening. And then as they do happen, you're kind of like, oh, I guess that's happening. And it's not until you are able to rise above it or disassociate from it and step aside from it, maybe even taking 5 or 10 years to do that and go, I can't believe that happened. And it's only with your hindsight intelligence that you can look back and go, yeah, I will do something different next time. But we never do, because our human brain takes over, our limbic system. And in your limbic system is your amygdala, and your amygdala helps to manage your emotions. And when you're losing money in the market and you have 30 or 40 ticker symbols, even if you have 12 ticker symbols and another 8 mutual funds, the limbic system's going to take over, and it's going to just crucify the prefrontal lobes and make the decisions from there forward. So there's some crazy things going on these days, and I want to talk about one specific crazy thing that's happening that it's hard to believe, and I would say there's no way that could ever be that way except that it's actually happening. Hey everybody, this is my weekend podcast. Actually, I said that backwards. Hey, everybody, this is RC Peck, and this is my weekend podcast. And the theme to this weekend is bosom buddies. Now, I know I probably could have been crude and put a little, bubble out of Mr. Draghi's mouth when he was saying something to Mr. Carudo. And if you don't know who Mr. Draghi is, this is Mr. Draghi right here. He is the European Central Banker, the governor. He's the top dog at the European Central Bank. And the European Central Bank manages or oversees the largest economic bloc on this planet, known as the European Union. But you got this other guy over here, Mr. Carudo. He manages the bank for the 4th largest economic area, or in this case, Japan, on the planet. And both of these guys are hell-bent on, especially Mr. Carudo, on destroying their currency. And you think that just destroying it would be enough, but it actually isn't. And they're bosom buddies because if the market is going to move higher, let me be clear, if any of the markets on the planet are going to move higher, whether that's the Chinese market or the Indian market or the European market or the Japanese market or the Canadian or Australian or Mexican market or the US stock market, it's going to be on the back of these two guys first. Let me explain. So what you see here on the screen is a price chart of the Japanese yen. And we're looking at about 4 years of data. And in 4 years, the Japanese yen, Mr. Carudo, has made sure that it has been devalued 40%, 40%. I find it interesting. I believe Donald Trump was attacking the Chinese because their currency dropped 4%. 4, not 40, but 4. And in fact, the Chinese have been spending hundreds of billions of dollars to keep their currency pegged to the US dollar. They're spending a lot of money to keep it elevated, and a little teeny tiny drop of 4.5% devaluation, and all of a sudden everyone's all, oh my gosh, the Chinese are devaluing their currency. The Japanese have devalued their currency 40%. 40%. But it's not enough. So Mr. Carudo, he came out today and said, I'm going to make interest rates in Japan, I'm going to make them negative. And if you want us to hold your money, we're not going to give you back the same dollar amount. In fact, we're going to give you back a little bit less, but we will give it back to you. And it's because of this little dink right down here in the lower right corner of this price chart. What happened was the Japanese yen was starting to maybe get a little too strong, that 40% drop in the Japanese yen over the last 4 years. And it just kind of poked its head above this downward trend. And Mr. Carudo, in charge of the third or fourth most important central bank on the planet. I say third or fourth because the first is probably the Fed. The second is probably the European. And what is the third, the Chinese or the Japanese central bank? I don't know, but it's one of those two. Probably the Chinese central bank is number 3. But more people trade the Japanese yen around the planet, so I could see people having a debate about whose central bank is actually more powerful right now. But this little teeny bump, which you can barely see on the screen, that threw the 4th largest economy in the world into a tizzy. And the governor in charge of the Bank of Japan had to come out and go, okay, we'll drop rates. We'll make them negative. We'll do negative interest rates in our country. I mean, this is the 4th largest economy on the planet, and they're negative. I mean, it's one thing for the Swiss to go negative. Like, Switzerland's 7 million people? You can't find it on a map, right? Especially, I'm joking a little bit, but you look at a European map. If you don't know Europe, I don't know, it's somewhere in there somewhere. The Swedes have done some negative interest rates, but don't ask a 17-year-old American kid where Sweden is. If you're lucky, he'll get near the euro area, but trying to decipher whether it's Norway, Sweden, or Finland, forget it. So some teeny tiny countries have gone all negative on us. Germany has dipped into the negative, but not in the way that Japan's going into it. So you got Germany staying negative, but kind of Japan trumping that and even going bigger. So this is really interesting. And if I just zoom in on this price chart right here, let me just do that, hold on. I zoom into this and you can see that the Japanese yen has really stabilized, kind of going sideways for about 13 or 14 months. And it didn't even poke out of this sideways channel, and it still scared Japan enough. Now remember, Mr. Carudo, the governor of the Bank of Japan, he will do what's best for Japan. Mario Draghi, Mr. Draghi, he will do what's best for Europe. And Ms. Janet Yellen will do what's best for the U.S. So the question is, Japan's going negative, Germany's negative, Europe's going negative. How much longer can the U.S. stay positive? Are they really going to increase the federal funds rate another 0.25%? I don't know. Of course I don't know. Nobody knows. That's ridiculous. I don't even think Janet Yellen knows. But man, all I can think about is what Janet's doing is, hey, look, I think some bad stuff is still out there. I want to be able to get up the federal funds rate to maybe 0.5%. So when the bad stuff happens, I can drop it down to 0.25. I can drop it down to 0. And hear me, this is like, RC, that's ridiculous. That would never happen. That would never happen. And then she's going to make them negative. She's going to go negative interest rates on us with the rest of the world. Sounds ridiculous. I know, doesn't it? It's ridiculous that every major bank in the United States almost went out of business in 2008. No way. They all were doing the same stupid things with their mortgages. And yet it happened, and they got bailed out by the Fed. ridiculous things only happen in real life because we would never believe them if they happened in make-believe TV or movies. So the question is, what do we do about this? And what is the next step? And really, what's the takeaway? So here's the takeaway. Negative rates are needed, ... Now, are they really needed? But negative rates are needed if the S&P 500 is going to break higher out of its 18-month channel. That means the United States, about 80% of my listeners are in the United States and about 20% are overseas. And there's about 25 countries represented that listen to this podcast weekly. So when I say we, I'm kind of being a little fun here, that we being the United States. But the United States might see negative rates too. And it sounds ridiculous to say that, doesn't it? It's never happened before, but everything has never happened before until it has happened. I mean, this is how everything is in life until it does happen. And things never happening happen every day. So we may see no way that will never happen. We may see that come to the shores of the United States. But you've heard me say this, to get the S&P out of its channel, that 18-month channel, that 13% channel, and we are at the bottom of it right now. We just popped out of the bottom support zone, and I believe we popped out of it because of what Mr. Kurudo said in Japan, and that has put a little spring in the Japanese stock market to the tune of 2 or 3%. But what we're in right now is a sideways channel where a lot of the fundamentals, earnings, do people really want to be in the stock market, people's beliefs, sentiment, 7 years of the stock market going higher, that's kind of weighing on the market to the downside. But then to the upside, you have a handful of incredibly influential people on the planet, Mr. Kurudo and Mr. Draghi being two of them. These guys are more influential than presidents. They are literally moving markets and making markets change value to the tune of trillions or tens of trillions. It's actually tens of trillions of dollars. That's the world we live in right now. It's crazy, isn't it? So the takeaway is we could see negative interest rates around the planet. The other takeaway is the United States, is stuck in a sideways channel. And we're at the bottom of that channel when we just broke out of that bottom support zone, supporting, kind of underpinning, supporting that bottom channel. And it came from the benefit of our enemy in World War II, who we bombed the hell out of them and dropped 2 atomic bombs on them. But, they're helping us out today, which is pretty cool. So stick to the plan. If you're following market probability, stick to the alerts that come out. We are still in a kind of a question mark period right now. No back up the truck scenarios are happening right now. More is unknown right now than is known. And until we have a clear direction from the S&P, we're going to play it smart and have the position, be able to rise above what's happening and go, you know what, right now it's okay to not know. It is all right to not know. And let's position our money from a position of, we know what to look at, we know where the signals are, but right now we're kind of in that ambiguity space, that somewhere place, that purgatory of not really knowing what to do, because the S&P 500, which has hundreds of millions of people behind it, it doesn't know what to do yet either. Hey guys, this is just another step in helping you protect your future and protect your portfolio. Until next week, this is RC Peck. Hey everybody, thanks so much for being in my world. I love putting these together. It's not a trivial thing to sit down and put these together and get them out and get them published and let you know about it. I love doing it. It's kind of, in a way, my meditative practice. And over the last week, I've talked to a handful of people about their own portfolios. And it's interesting what I heard. One of the things I heard over and over again was, in my own words, in my own brain, was that 2008 correction, that 2011 correction, it almost created kind of this post-traumatic stress disorder around finance, like this financial post-traumatic stress disorder for people. And they're like, look, I'm a decade older now. I was able to manage the 2008 correction and the 2000 correction because I was working, and my runway of working was 15 or 20 years. But now it's depending on which 50% correction you're looking at. I don't have 15 or 20 years that I can correct any 50% loss. I've got 5 more years, or I don't want to work 15 or 20 more years. And there's a way that you can step aside and rise above and not have to deal with the next financial PTSD kind of situation. And the simple step is really to speak to me on the phone and have a strategy session with me. And what I've heard time and time again with people is just that hour of looking at their numbers from a kind of an outside third-party person saying, finding out what they really want, not what they need, and finding out, them going, I don't really want to be trading in the market or be looking at newsletters. I thought I had to do that. But if there's a better way, I want to know about that. And the step for that is super, super, super easy. You just email Patty. It's the same name I've been saying for years. And if you want to do that, you can. Just email Patty, Patty, at Fearless Wealth, and she can get you set up super easy. Thank you for being in my world, and I look forward to connecting with you soon. Take care.